Welcome, Wealth Champions, to another episode of Trade Talks from the YouTube channel Growth Garden. For those who've been here before, welcome back. And for those who first time, I'd like to welcome. I'm going to start off with, on this channel, we like to talk about different strategies and things that I learned with managing your money and investments. I have to put the disclaimer out there. I am not a financial advisor, nor do I have a license. This is for entertainment and educational purposes. Please do your due diligence in doing research on learning what investments are and how they work, as well as talking to a financial advisor or doing your research that you're comfortable with understanding the investment, because you can lose money in investing. I just talk different strategies that I've learned throughout my walk in life and things that has helped me out and some of my clients. So it's a way of me sharing the information so we can all learn and grow and get better on our wealth journey. Today I'm going to talk about a product called an ETF and what that is, because I had received a question from someone, a request to see if I can explain this for people. So, what is an ETF? An ETF stands for Exchange Traded Fund. This is one way to invest. It's a pre-made mix of assets, often made up a combo of stocks and bonds. Just like stocks, ETFs are available for investors to buy and sell throughout the trading day. At the end of this lesson, you will have a general idea about the different types of ETFs and what goes into them. ETFs are kind of like a smoothie. You might think of it like a pre-made smoothie with different types of fruit ready for you to drink with the right choice of ingredients. It can be an easy way to get a lot of vitamins and minerals in at once. When you buy a share of an ETF, it's like taking a sip of an investment smoothie. ETFs also allow you to invest in multiple assets with a single transaction. By comparison, buying a single stock means investing in only one company. ETFs can also help with risk management. Many people consider buying ETFs because they can help with diversification. That just means that you can invest in a variety of assets to manage your risk. Think back to the smoothie example I gave you earlier. You might choose a different one depending on what you want from it. Need a health boost? You might choose a smoothie with spinach. Different ingredients offer different potential results. The same goes for the ETF. Different stocks and bonds and holding in the ETF will offer different results. Different ETFs can be made up of different assets. Just like a smoothie, ETFs can come from different flavors. One flavor or category ETF might track the U.S. stock market as a whole. Others might concentrate on specific industry types of companies. You can choose an ETF to support your goals. So some examples of that may be, if you're a person that is into crypto, you can find ETFs that's about crypto. If you're a person that's into the weed stocks, you can find a ETF that has a bunch of different weed stocks in it. If you're into technology, you can find the ETF that has different technology aspects to it. So yeah. So basically, it's a way to get a mixture and a blend of different things, different investments that actually can give you diversity and a variety. So you have more than one stream of income. You're not locked in to that one particular stock. Also, an ETF perspectives is like a smoothie recipe. to find out what's in an ETF and learn about a strategy, you can read its prospectus. This document helps to explain the fees and the risk associated throughout certain investment funds. An ETF perspective is kind of like an ingredients list for the smoothie example I gave earlier. It can tell you what exactly is in the smoothie to be the specific mix that you can decide whether you want to pick or choose that. ETFs also are managed by professionals. So therefore you have a built-in protection. They don't work for free. They do have a fee in which they charge. It's called an expense ratio. That is the percentage that the fund charges to manage the account. But the thing that I do like about that, some are passive, some are active. A lot of the passive ones are managed by a computer, an algorithm. The active ones are managed by a person. Usually those are a little more expensive. But the thing I like about it is they have your back. So they're watching the fund, constantly making updates and adjustments to the fund. So they will take out one company that's underperforming and replace it with a company that is performing. So you have built-in protection. So you have less stress and less worry about you managing an individual investment to read the company. Oh, they're doing good, they're doing bad. The CEO did something. I don't like the way they're going. You don't have to worry about that. This is done automatically, either by a person or computer. And they look for the best performing ones and reevaluate them and kick out the underperforming stocks or holdings and add in a better performing one to help get you to get a better return, you and everybody else that's in the ETF. All right, that's it for today. I hope this was helpful. In the comments, you can let me know, have you ever heard of the ETF before? Yes, no. If you have, you can put in the comments which ones that you actually invest in or some that you're just looking at and seeing if you want to invest into them. I would like to really see what people are picking for their investment portfolio. Once again, thank you for supporting the channel. Again, if you got something from this, don't forget to share, subscribe, and like the Growth Garden channel. So yes, let's all help each other, lift each other up on this wealth journey. Thank you.